Wrong and search. True traders react to the market.
How to identify the big boys accumulation? So when you know about this, your trading journey in the stock market will be much easier. At this stage, we call it the moving house. Usually, retailers or system will not be able to detect the big boys accumulation. If anyone tells you that they can track down the big boys transaction volume with their system to identify accumulation, I personally think it's not quite possible to do so. Because with the understanding of the big boys, they will be very low profile and quietly accumulate their shares to avoid attention from everyone, especially the authorities. If it's a system that tracks big volume in as accumulation, from my understanding, those are not accumulation. Might be just creating big volume to attract buyers in, because there are too much attention is created. Usually, accumulation takes at least 2 to 3 months around the same price and often not liquid and low volume at this point, just like the example that we show you here. Big boys often push the price up to 100% from their accumulation, but this don't always happen. Sometimes they might stop below or higher. So we shouldn't always expect a 100% return from all accumulation stock. Like our tagline, always follow the big boys. So we don't put in our expectation into the stock market because we are not the big boys. So we must follow the big boys call. Just like the example over here, the accumulation price was about like 54 cents and the price actually moved up above to 85 cents. So this is not more than 100%. And then we can see from here, this stock's accumulation is about 40 cents and the price goes up close to 1 ringgit and 20 cents. So it's more than 100%. And the next example, we can see here, the accumulation price is 20 cents. The price moved up to about 45 cents. So from here, it's roughly about 100% here. So don't always expect a 100% returns from all the accumulation stocks. So we always follow the big boys and exit when they show the signal to tell us to exit from the stocks. These are just a few of many stocks in KLSE move the same way. You may look into all of the stocks in the market, you will find almost 80% of the stock move like this. Have the accumulation, push up the price, and the price throw it down. The red line can be your portfolio performance if you acquire the skill to follow the big boys with our operator analysis. We apply operator analysis in our portfolio and able to generate consistent profit, and most of the time the returns are able to outperform the indices. Especially when the market is bad, we are able to outperform much more, which indicates our operator analysis able to analyze the intention of the big boys in the market by avoiding trades or investment when most of the big boys are trying to attract buyers in for profit taking. This helps us to secure our profit way better than the analysis we have used before. Our risk management plays a big part in this consistent profit too. It helps us to reduce our risk exposure and not losing too much when we are in the wrong trade, and maximize our returns in the right trades.
Start following the right way to invest into the stock market now by attending our training course. We will guide you in our training course from identifying big boys accumulation in detail. Once the big boys start their engine to push the price up higher, we will jump into their ride together. Then we will ride with the big boys all the way up until the big boys tell us to take profit from the transaction pattern. If you miss out the housewarming party at the bottom, don't worry, you will learn how to move in for a second chance with our Apple Tree strategy. Operator analysis is a better way to invest into the right stock. We can help you to generate higher returns by riding with the big boys and, most importantly, lower risks. The details of the operator analysis training course and the sign up link is in the description box below. Let your money work harder for you by following the big boys.